Today is the 15th of July, 2010, and today's Silver Log will come with some commentary. It'll be somewhat short, but longer than a minute and a half, which the last few videos have been. And today's Silver, once again, really hasn't been doing too much. We have this big level at roughly 18 that only got tested at the SCAP Open. It had a little bit of resistance here, a little bit of resistance here, and a little there. Not too much. You can even make a case here. These are close only 1 minute time frame for silver, up only a penny today, but pretty much not really doing much whatsoever. If we take a look at silver on the 15-minute time frame, going back to the 14th of June, I have added a bunch more different moving averages on the screen, and that is because of the major significance that we have within this 18 level on SLV, which would translate to about 1830 or something on the COMEX. So at this 18 level, we have the running average since this significant top, the running average since the April highs at roughly a little over 1920, and then the lows, which I think are even below 1720 from the same month. They have all met up towards this area, showing a lot of indecision. The other moving averages I have placed on here is the one that starts right in here. That is the 50-day moving average. And the 50 was support here. It was support again. And then this big selling, we broke the 50-day moving average. It is now at a level of resistance. This moving average is the 20-day moving average. And amongst the 20-day moving average, you found some support in here. You also found support on this level. And just like it did with the 50-day, it broke well below it. Then it found some resistance yesterday during its bull trap on the shorter term time frame. Just trying to find the proper word. And nonetheless, this 18 level is getting congested with so many different moving averages and other types of resistance and support levels. Well, resistance in this case. And this moving average from this top, it's probably not going to take long before it will get to 18 the way things are going. It found resistance along here. It found resistance again. And this recent move got us above that key trend line, the blue line, which is the 5-day moving average. As it was declining, it was a level of resistance. It was a level of resistance. It got above the resistance. It found the important support, and then it has managed to lift higher. So the key support levels would be the 5-day moving average, this previous level of resistance here about 1780, which is in coordinates with this running average. You also have the Fibonacci that I put on yesterday of 1777 and 1757 as some key levels of support. I'll go over more of this weekend as I'll cover a little bit more. Most likely be sometime tomorrow, and probably be about 15 minutes style. Nothing like the last week 1 hour video was, but you never know what's going to happen within the market. It's been such a boring week overall, and you really don't know exactly what's going to come into play. But we have this trend line right now, and you can make a case because 18 is such an important level that we can build ourselves up a pattern which is that of an ascending triangle, because 18 was also support on a few different occasions in here, and now the support is acting as a level of resistance. As far as the sentiments are concerned, I'm going to explain it a little bit more in depth tomorrow. It's really based on two things. One, it's based on Fibonacci as its main indicator, and then judgment when Fibonacci is very close, which is the case with the daily chart. I've been stating that the daily chart is cautiously bullish, and in reality, by Fibonacci, it should be neutral. And I'll show you why sometimes you have to go with better judgment. As far as a 15-minute chart is concerned, with us being at this level here, with this level of resistance at it, we're at indecision, and indecision would thus be a neutral chart. As far as the Dow priced in silver today, it went way down. It lost a fifth of an ounce of silver, which pretty much was the same sort of percentage it lost on the exchange today, as silver really didn't do much, and it had a significant rally at the end of the day, worked out to about a 100-point move. And I was thinking earlier about options expiration, which is yet another casino game. And the casino makers, I think, usually like to ensure that they do the best, try to make it so the least amount of people are in the money. So if you ever see situations where the market's been caving in, selling off really big, and well, it's a few days to options expire, a lot of people have puts, they're going to prop the market up to the upside. And the situation we've seen here is over the last little while, we've had such a big rally from the lows that I've been thinking it seems pretty much like a good chance that the markets are going to sell off. And that's because of all of the call options that have been placed within the market. Now, as far as the puts are concerned, a lot of them have already been cashed, sold as far as the bid ask offer is concerned, or even the selling that they would put into play would still be not enough to put them in the money based on when they purchased them. A lot of calls would probably have been played near the bottom, and you kind of wonder what the big institutions are doing. Oh, people, the Dow's at this level. We are bottoming the market now, knowing that, of course, they know the direction that it's going in. Let's get ourselves some calls here and calls there. And well, when are we going to sell them? Well, when we top the market, that's when we'll sell them, of course. And I'm just going on with what looks like possibilities, as the market does seem extremely, extremely rigged. Thank you for watching, and I will talk to you tomorrow. Take care.